Fine. Alright, OB Investing. We'll take a look at Elastic here as you point out in your comment. Can't wait. So let's take a look at this. It's underappreciated, so we're going to take a look at it and see what exactly you're talking about here. I'm excited, obviously. I love getting suggestions for things to look at. And I can find new companies potentially. So just taking a look, obviously, first impression, I'm always going to look at just stock price, market cap, and the like. So typically you see $7 billion market cap is what it's saying it's trading at. History of the stock, I like to look year to date, certainly with everything going on. This is a stock up 35% year to date, which is pretty massive, a time in which the market is relatively break even and really down for the year. It's interesting to see this kind of company just really skyrocketing since their lows. You see overall up nearly 100% from their lows that they hit in March. So very massive run up, which certainly scares me, all things considered. And when you think about certainly how stay-at-home stocks, stuff like this work, because you see originally, like right under the title there, it's an open source software company. These are, in my opinion, would classify as stay-at-home stocks, right? Those are ones that have absolutely significantly outperformed the market, and for many reasons, because they actually are benefiting their business model because of this. So that got me pretty excited when you think about that. But in my opinion, I certainly am waiting on these stay-at-home stocks because of the fact that they're very much due for a cool down here in the near future. So that's something I would consider. We also can notice that this thing IPO'd in 2019, or 2018 I should say, late 2018, and it is up around 22% since IPO. So nothing crazy there, all things considered, as far as the price movements are concerned. 52-week high of 104 on this. So just a little analysis of the price. It's a very weird, I mean, it trades as volatile, as a lot of these IPOs really do, these new tech IPOs that are coming out. A lot of them just really are trading volatile. So I want to take a look at the company. So we're the company behind Elastic Stack. That's Elasticsearch, Kibana, Beats, and Logstash. From stock quotes to Twitter streams, Apache logs to WordPress blogs. Oh, good rhymes, guys. Whew. Love that. We help people explore and analyze their data differently using the power of search. So right there alone, you can kind of understand what this company is about. The fact that they are really all about data analytics. So they're helping companies analyze data and really target specific markets, depending on what it is. But it's very important for, data analysis. Think about even when you talk about something like YouTube, developing on there. I mean, everyone checks their analytics for a good reason, so you know who's watching you. That's really what the kind of service Elastic provides for companies. You can find out what exactly, who's clicking on what attracts people. I mean, that's really the benefit here of Elastic. So definitely taking a look just at their website. You see overall, product-wise, a big, massive thing obviously is going to be search related because, well, that's how you target certain markets. Actually, you talk about spending your ad dollars properly. You do that through analytics searches, and you have to actually know who you need to be advertising to. So this is a company that really gets utilized, can be utilized by other companies to really benefit how they're using their ad dollars and who they're going to be deploying those ad dollars to. So very interesting if you think about just the future of really business, specifically retail. If you think about retail business, how that benefits, because a lot of these companies are going to be pushing to online retail. And when you do that, obviously analytics are massive, especially in the online retail segment. So using these type of analytics, it's how you suggest similar products that people might be interested in buying. You see on Amazon, whenever you're looking up a certain product, it'll give you a suggested product. There's another page there that has, these are products that people also buy it with. Here's suggested products for you. When you go to your homepage, it'll tailor that homepage for things that it thinks you will like based off your purchase history and your search history on there. So that's where Elastic really benefits. And personally, I'm not the kind of person that gets impacted by that. I don't make impulse purchases like that, but there are a lot, I'd say a majority of people that actually do, and that's the benefit of really this analytics data. Analyzing your data and analytics is massive, right? But when I look at it, you think of a company, another recent IPO in Splunk, right? Splunk is another pretty similar company, all things considered, all focused on data. Data is really the main basis of this, right? It's all, for the most part, about data and how you analyze your analytics. So that's a major part of Splunk. And there's really a lot of these newer IPOs that kind of have a similar premise, but the most notable of them probably Splunk. Splunk being one that actually has a little bit higher of a market cap than Elastic. It's a company that's really captured more of the share in terms of the market. Market share is certainly a little bit higher for Splunk in terms of percentage of business. They do a little bit more in revenue. So definitely similar companies, all things considered. If you know about Splunk at all, it helps you kind of understand exactly what this company does. And then obviously I wanted to look at some of the data regarding this company. They just posted earnings yesterday or 2 days ago as of posting this. So I was curious about this, and as you can expect with most of these tech darling IPOs, it's a negative earner, GAAP EPS of negative 38 cents. It did beat by 15 cents, so they were expecting a negative 50-cent mark, which is just, it's ugly marks. And a lot of these really early startup companies, they just fail to make profit, right? Even on a non-GAAP basis, they're not making profit. And they had a massive beat, though. Revenue perspective, you see 53.4% growth year over year, which is obviously good. Good to see that kind of growth coming out of this, because the only way you really could consider investing in these stocks that are massive negative earners is if they're at the meantime growing that revenue massively too. And 50% revenue growth is massive, absolutely. So that's kind of where people get the ability to just sit to the side and kind of enjoy it. You had in April, Elastic got the nod from D.A. Davidson analyst Andrew Nowinski, saying that he gave it a buy rating and a $70 price target, which it's very much surpassed that at this point. We're talking about $85 stock at this point, but pretty much he's excited about the search, observability, and security features that this offers. The analyst sees big growth potential in Elastic's land and expand sales strategy. So overall, it's got a bullish average, which is exciting. So you look at the data, obviously, with this company, market cap of $7 billion, price to sales of 17 is very high, price to book of 17 very high as well. Just really very high valuation on this company, market cap of $7 billion. When you look at potentially annualized revenue here, looking at best, you're looking at $400 million probably for this company. Not exactly what you want to see. We'll look at that data too and see exactly where that revenue looks like. Trailing 12 month of $384 million, but trading at a market cap of $7 billion is, it's quite steep. I would say, in my opinion, we're talking about a company trading at really 20 times that valuation. So it's pretty steep. 20 times that. I think I've lost my darn mind, but valuation is steep on this. I don't know. I mean, what can I say? You do see a growth story with this company, though, from 2017 posting $88 million to right now, trailing 12 month of $384 million. It's massive growth. You do see massive growth, and I think that's why people might be excited about this stock. One thing to also note, though, is this operating income and really this net income line is not looking good, right? This net income line is getting a lot worse as the stock progresses, starting out with 51 million negative, now 170 million negative. Now the percentage of the revenue compared to that net income is improving a little bit, I will say that, but overall the loss is still massive, right? A net income line of negative 170 million is not one that I tend to like. As far as future growth expected with this company, Current year, they're expected a negative $1.34 EPS versus a year ago, negative 93 cents. So that EPS line is expected to actually worsen, which I don't like. I really don't like that at all. Next year, expecting $1.11, which is still worse than a year ago EPS, which is, it's concerning. I think it certainly goes without saying it's a little bit of a concern. It'll be an improvement year over year, but still worse than 2 years ago. It's not really a line you want to see. You don't want to see worsening EPS numbers because the company's got to make profit, right? From a revenue perspective, actually this year only expected to increase revenue 30%. Next year 31%. I say only, that's still good growth, but if you see the EPS line grow as well, you want to expect a little bit larger in terms of sales growth, in my opinion. At least that's what I'm looking for in a company, a little bit more in terms of that. Investor relations page, obviously we had to track down this balance sheet for the company because you got to understand if this is a company that's sustainable due to the fact that they have such high cash burn, right? Current cash equivalents on the company of $297 million versus a year ago 298. Guess what? No real change there year over year. Total current assets of $480 million versus $429 of a year ago. So a little bit of increase in assets. You do like to see that. Total assets in general of $803 million versus $485 of a year ago. So that's a very big improvement on there, all things considered. I think that's quite a big improvement. Total current liabilities of $321 million definitely gets outweighed at least by their current assets number, and that's against a 203 of a year ago. So good improvement there. I mean, really, all things considered, they grew assets more than they did liability, which is really the main thing there. Total liabilities of 390 versus 222. Pretty big growth in liabilities. But overall, you see a shareholder equity of $413 million. I'd like to see it a little bit larger if you consider the fact that this is a company that's going to be burning $170 million pretty quickly this year. So if you think about it stretched out, that gives them really, could be a couple of years worth of survivability here. Now, I'm not saying they won't get an investment because we talk about really the viability of this company long term, and they're a company very viable long term, right? You think about the potential for this company, it's very high. It's just very high because of the fact that this is a future-oriented company, and it's a company that should benefit very much so in the future as long as they get some key partners. If they get some key partners that can vouch for them, it's really just a steamroll from there. Think about you got your worthless Wobbuffet, and he knows rollout though. But, he keeps using rollout, and every time he uses it, it keeps getting stronger and stronger, right? So the more customers they get, the stronger Elastic gets. You didn't think I'd throw in a Pokemon reference, but I just did. That's right. That's how you know who I am. But anyways, what can I say? I don't know necessarily what to think about Elastic here, in my opinion. I'm not certainly thinking these are decent levels to buy it at right now. And I do believe that this company long-term has a lot of potential, but I don't think these are levels in which the stock should be at as far as purchasing, just due to the fact that I think all of these darlings of the pandemic era, stay-at-home stocks, they're going to be falling shortly. I do think within the next little while, whether it be really just in the month of June, I think you're going to see a little bit of a downturn in these stocks, and I think it should be a relatively large downturn, all things considered, because of how much a lot of these have shot up. So just anticipate that. I don't necessarily know if I can tell you a fair value per share on this at this moment, because obviously you need to price in a little bit of growth here. I think, obviously this $85 per share is definitely not fair. 60s, we're talking, gets me a little bit more excited. We're talking low 60s. I might get a little bit, potentially get my feet out from underneath the covers. maybe below 50s, we're talking about taking the covers off the torso. And maybe below 50, I might go ahead and get out of bed for it, But right now, I just don't like the valuation. So, but it is a very interesting company long term.